if you're following the real estate market, you may have an opinion about whether it's going to bounce back or not. And if you watched our last episode of Homes Made Simple, you heard us just talking about the bounce back and how Daryl really doesn't think that's going to happen. So Daryl, great to dive into this topic with you today about refinancing and mortgage renewals. You know, a lot of this is going to be coming up for many, well, really tens of thousands of people are going to be in that position in the next while. So let's dive into this. In our last episode, we talked about whether or not there would be a bounce back. And you said no, but I'd love for us to dive into that a little bit deeper. Why don't you think there's going to be a bounce back?
I think it's really important to look at just the numbers and how financing works in general. Um, if you're hoping for a bounce back, and if you're more important, if you need the bounce back, that's could be a concern. And I think it's good to know why things are changing, at least as far as from a financing perspective.
And by the way, you're watching Homes Made Simple. We hope that you'll follow the podcast. We anticipate having many more episodes like this coming your way so that we can really make real estate simple for you. And so, Daryl, let's just talk about some of these articles that have been recently published. A few of them are talking about, you know, the interest rate and how there's a trigger point. And can you talk to some of the realistic things that are going to be happening over the course of the next many months that will impact a lot of people?
Well, you're coming into the summer, and a lot of people, they close, or when they purchased their house originally, it was with the idea of trying to move in before school. So you got a lot of people that are going to be doing it at the end of the summer, and then coming into the fall with the new interest rates. Even if you had done it before, it's just going to be changing. So when you go back to the bank, you're going to notice that there's going to be a big difference between what you would have gotten 3 or 5 years ago compared to what you're going to get now. And it would be good to be prepared as far as what to expect when you go talk to your bank.
Well, there's an article I want to just show on the screen right now, and it's from the Canadian Mortgage Trends. And in this article, it talks about, and this is by Stephen Hubel, who wrote this August 25th, 2022, and he talks about, TD and CIBC, two banks, mortgage renewals and trigger points. And in particular, there's a section in here that we're going to really dive deep into. And Daryl's done a great job of identifying really the key points from this article that, of course, you can go ahead and read in detail. But one of the most important parts of it are shown on the screen right now, Daryl. So it's talking about the fact that there are 80,000, people with mortgages, variable rate mortgages, that are going to be reaching their trigger point. And then a little further down in the article, he's talking about all of the people impacted with fixed rate mortgages. Can you kind of walk us through what's being identified or pointed out in this particular article here by Stephen Hubel?
I've heard them talk about the trigger point quite a bit and talking about the variable rate mortgages. I personally don't put as much emphasis into the variable rate guys because they're moving as the rates change. They're experiencing changes in real time. My concern is more the guys that are in fixed rates, because the fixed rate guys are going to go from, let's say a 2% to suddenly a 5% in what'll feel like overnight. Where the variable rate guys have been experiencing that every single change, they feel it right away. And when you're looking at this, 19 billion of fixed rate and 7 billion of variable, there's a lot more people in fixed that are going to see a sizable change in what their rate was compared to what it's going to be in the next 12 months. And now this is just CIBC, but I would assume you could figure the ratio of fixed to variable is going to be pretty similar across all the major banks. So that's going to affect a lot of people in a very short period of time.
Yeah. Well, in this article, it cites 26 billion of its mortgages for CIBC will renew in the next 12 months. I think a lot of people might be, maybe if they have their mortgages with CIBC right now, are going, wait a minute, that's me, mine, right? And so I think that starts to send up alarm bells for some people, because now we're talking about renewing at a higher rate, which of course means more money out of people's pockets. You did something really cool, which was that you went and did a calculation, which I'm going to bring up on the screen, so that we can calculate what kind of changes that may mean for people. So obviously we had to choose certain specific kinds of numbers to kind of illustrate the point here, but the point being that there will be some changes that come about. So why don't I show it on the screen and you can walk us through what it means?
Sure. Okay. So what I've done here is a lot of mortgages right now are around the 600,000 mark. So I just picked, what a general mortgage is right now. In the first column, to get a 2% mortgage in the last couple of years was not that hard, pretty common. Some guys were getting down as low as I think 1.6. So let's just say two. It's not an unrealistic number. The second column, I have the same mortgage amount, right? So 600,000 at 2%, 600,000 at 5% over 30 years. 5% right now on a fixed, that's not a bad rate. But you'll notice that your monthly payment has gone up about $1,000. So almost 50% a month. Unfortunately, in the last couple of years, for most people, if they wanted to make any sort of a move in the market, they had to max out. So if they were maxed out and suddenly their monthly payment is going to go up 40, 50%, that's going to be very difficult. Now, we talked about how I didn't feel that the market was going to bounce back in January, February, as maybe it had, say, bounced back or just trying to turn back on in recent years. And the biggest difference is because when you're going for financing, they're looking at your total debt service rate, which is a amount you can pay out of your total income per month. So if you were approved at 600,000 at 2%, you were approved essentially for a payment of $2,215 a month. But now, if you were at a 5% rate, now all of a sudden to get that $2,200 a month, your total mortgage is only $413,000. So there's almost a $200,000 difference in what you can actually buy. And that's where when people talk about it bouncing back in the spring, it's very difficult to go buy a house for $600,000 if you're only approved for four. And that's where you're going to see the biggest difficulty coming into the new year is you may very well want to buy that house, but if the bank won't give you the financing, it's not happening.
And the difference between a home at 600,000 versus 400,000 is radically different. And a lot of people, when they reach a certain stage in life, they don't want to go backwards. They want to go forward.
Yeah. You have people that are, growing families, right? They're in a certain size home. Maybe when they bought the house, there was no kids. Now there's three and they need a bigger house. Well, they're not going to go to a smaller one. So their options are they'll either not move or they'll just offer less. Um, or you have people that maybe are older and downsizing. Well, they're not going to downsize their house at a loss where they're going to go to a smaller house for less money. Most of them are looking at downsizing and putting a bit of money in their pocket. And they want certain finishes. They've reached a certain point in their life. They've worked hard and they want to make sure that wherever they move to next is, equal finishings to where they are right now.
Yeah. So what do people need to be thinking about then? I mean, some of this stuff is obviously beyond your control, right? Beyond our control. We don't control interest rates and how that works. But are there things that people can do? Are there smart ways that people can mitigate some of these changes that may come in their way? Or is it is the way it is?
It's really a case by case basis. It depends on the individual. I mean, if you're in a house right now and you have a very, very large mortgage, and let's say you're in a lower rate, you may want to think about, what's the long term. If I'm at a 2% now and it's going to be coming due and it's going to be 5, 6%, can we make those payments? And if the answer is no, maybe you want to look at selling. If you're looking at buying a new house, you might want to say, okay, I'm approved at 5%, but maybe it'll go up to 6. What price point do I want to go to have a little bit of cushion? Just so when things move forward, it's not going to get tougher.
Yeah. And your point about it being a case by case basis, I think is precisely the reason why, again, if people are listening, watching, they're saying, gee, I didn't really consider all these things, they can reach out to you. How would they do that?
Oh, they can contact us on Facebook at Jessica and Daryl Vansicle. That's probably the easiest way. They can reach out to our office, Remax Twin City in Brantford, and we would love to talk to them. It costs nothing to talk to us, but it really depends on everyone's individual situation and what's best for them.
Yeah. Yeah, it is. It's not a cookie cutter type of solution. But what I loved about this conversation is that you brought to light a real issue that's going to be continuing to arise as the weeks and months wear on in this market, that is really correcting itself, right? This market's correcting itself, and it's not something that's going to switch around in the course of a month. Like, we're in this for a little while, correct?
Yeah, we'll be in this for a while.
Yeah.
How long? That's the $1 million question for sure, but expect it to be here for a little while.
Awesome. Well, there you go. Mortgage renewals. They're coming up, and there's a lot to consider. Of course, you can reach out to Daryl or Jessica Vansicle if you want to have a conversation and learn more about what your particular situation is and how they can help you. But also be sure to follow the show. Homes Made Simple podcast, Real Estate Made Easy. It's here for you so that you can navigate the world of real estate in the Brantford and surrounding areas. Thank you so much, Daryl, for being willing to share these insights, and I can't wait to talk to you next time.
It was great talking to you again.